And I got one from the economiccollapseblog.com. That's Michael Snyder's site. As you know, he's running for Congress, I believe, right? And he always has at the bottom, Michael Snyder is a Republican candidate for Congress in Idaho's 1st Congressional District. This guy's always got good articles and stuff. Remember this Friday the 13th, just passed. Americans are more optimistic about the stock market than they have been ever before. Now, Lindsey Williams said, melt up. It's not coming down. As long as Trump is in office, it'll keep going up. He's been right, by the way. I don't know that I'd call it a melt up, but it's definitely going up. You got to say that. My mom, Miss Psychic, right? As long as Donald Trump is in power, I do not see any kind of major economic thing, stock market thing. We might get a little thing that's down, whatever, but it'll recover and okay, everything's fine. That's about the worst she said that she would expect. My own mom saying that. I'm thinking, oh, come on, this does not fit the data that I tell you about every day, which means it's being propped up. Everything's being propped up. And you know by who? The Fed. So anyway, it says, remember this Friday the 13th, Americans are more optimistic about the stock market than they have ever been before. I'll be honest with you. I'm more psyched up on cryptocurrencies, like massively. Stock market. It's up 1% today. Bitcoin's up 10%, 20%. Okay, yeah, thank you. Happy days are here again for the U.S. economy, well, at least temporarily. On Friday, U.S. stocks hit another brand new record high. It seems like we are saying that every day lately, and most investors are absolutely thrilled by this seemingly endless surge. Global stocks are surging too. Today, which was Friday, the world stocks hit a new record for the 4th consecutive day in a row. But of course, it isn't just stock prices that are rising. As the week ended, pretty much everything was up. And we also got some good news about consumer sentiment. According to the new University of Michigan survey that was just released, U.S. consumers are the most optimistic about the economy that they have been since 2004, which means even before the stock market crash of '08. The Consumer Sentiment Index, a survey of consumers by the University of Michigan, rose to 101.1 in October, far ahead of the 95 economists polled by Reuters anticipated. Consumer sentiment surged in early October, reaching its highest level since the start of 2004. Richard Curtin, chief economist for the Surveys of Consumers, said in a statement. You don't think, Richie Rich, getting a little kickback to produce good data only by chance, do you? I'm just going to ask. We've never seen that before, of course. Never happens. And according to that same survey, we have never been more confident that the stock market will continue to go up than we are right now. Of course, it is kind of makes sense why U.S. consumers would be feeling so good about the markets. After all, stocks have only seemed to go up and up and up since the end of the last financial crisis. But as I've written about so frequently in recent months, our financial markets are even more primed for a crash than they were in 2008. And we have received warning after warning that stock valuations are ridiculously inflated and must come crashing down at some point. Of course, here's the thing. When he says at some point, what is some point? Is it like Lindsay and technically my mom said? 4 years. And for those of you who are new, what do you mean your mom? Who the hell's your mom? She has a psychic ability. And anyways, I find both hard to believe because I'm looking at the hard data. I look at the numbers. I see how high rents are. I see how high the housing prices are again. You have to have citizens with discretionary spending. They have to have extra money to go out and buy stuff. And most people don't. Which means the whole damn thing's propped up. The markets are propped up as a show pony. Hey, look how strong our economy is over here. Look how good we're doing. Well, it doesn't help me. My money's sitting in the stock market in a 401k. Well, I can't touch that for 30 years. Can't touch that for another 15 years. But it looks good on paper. It looks good right now. I'm happy. Oh, yeah, my numbers look great. When I retire, I'm going to have some nice fat money there until you go to retire. Oh, too late. Crash had to happen. Sorry about your luck. Money's gone. Plus, the real economy continues to send us some very troubling signals. The U.S. economy lost jobs last month for the first time in 7 years, and we just learned that General Motors is laying off more workers, as I just discussed. Starting in mid-November and going through the rest of the year, General Motors will close its Detroit Hamtramck assembly plant, its only remaining factory in its hometown, and lay off about 1,500 workers. When the plant does resume production, output will be cut by 20%, and 200 people will be out of a job. Back in 1999, the plant produced over 200,000 Cadillacs and Buicks a year. This year, it might barely produce 80,000 vehicles total. The truth is that we are in the terminal phase of the greatest debt bubble, in human history. And all over the planet, prominent names in the financial world are warning about what is just around the corner. For example, German Finance Minister Wolfgang Schäuble is deeply concerned about what he is seeing. Well, Wolfgang, before I even read what you're going to say, we've got the Federal Reserve propping up everything over here. You guys over there have the European Central Bank buying up quantitative easing, all of the so-called assets, which are junk assets, from the big banks, and you haven't stopped. So, big bubble, debt bubble, who cares? Double bubble, bubble, burpa-cola. Right, remember that from Willy Wonka? Double bubble, burpa-cola. Outgoing German Finance Minister Wolfgang Schäuble has warned that that's not to be confused with Parker Schnabel from Gold Rush. Okay, it's not Parker Schnabel. That is Wolfgang Schäuble. Has warned that spiraling levels of global debt and liquidity present a major risk to the world economy. In an interview with the Financial Times, Schäuble said there was a danger of new bubbles forming due to the trillions of dollars that central banks have pumped into markets. He also warned of risks to stability in the Eurozone, particularly those posed by bank balance sheets burdened by the post-crisis legacy of non-performing loans. What is a non-performing loan? And why do they have so many of them? Well, a non-performing loan means someone got a loan and isn't paying it back and won't be paying it back. Why doesn't that person or company have the money to pay it back? Because the economy sucks. And they're telling you the lies with the numbers and the employment's down and the best job numbers for September. It's all a crock of shit. Plain and simple. And these banks are sitting on tons of money in loans outstanding that they know they'll be getting paid back for. So the whole balance sheet issue is this. That's what it is. Which is why they're going to be built. There will be another bailout. There has to be. I mean, you can kind of say it's already happening. When a Federal Reserve, or in this case, the European Central Bank, their central bank, is printing money out of nothing and then buying up this garbage assets, right? These non-performing loans and crap. They're buying that crap up. That's what's happening. That's ultimately what's happening to make the banks whole again. They've been getting bailed out. We've already had, see, the bailout never stopped. You thought it was because they gave you some big numbers and trillion here, trillion, $4.5 trillion balance sheet. The Federal Reserve now has a $4.5 trillion balance sheet. That's in addition to the $900 billion TARP funds. And the trillions we've printed over the last 8 years, from 10 trillion to 20 trillion now, right? That does not include the $4.5 trillion Federal Reserve balance sheet. That's addition. That's a bonus. Not the kind of bonus you want, but it's a bonus. And Jim Rickards is completely convinced that a financial crisis is certainly coming. The bottom line is that a financial crisis is certainly coming. In my latest book, The Road to Ruin, I used 2018 as a target date, primarily because the two prior systemic crises, 1998 and 2008, were 10 years apart. I extend the timeline 10 years into the future from the 2008 crisis to maintain the 10-year tempo. And this is how I arrived at 2018. Yet I make the point in the book that the exact date is unimportant. What is most important is that the crisis is coming and the time to prepare is now. It could happen in 2018, 2019, or could even happen tomorrow. The conditions for the collapse are all in place, he says. It's simply a matter of the right catalyst and array of factors in the critical state. Likely triggers could include a major bank failure, a failure to deliver physical gold, a war, a natural disaster, a cyber financial attack, and many other events. If you look at how stock prices have behaved so far this year, it looks suspiciously just like the bubble that formed in 1987, just before the market crashed. The conditions for an absolutely historic stock market crash already exist, and they have existed for quite some time. None of our long-term problems have been solved, and with each passing day, this colossal financial bubble just keeps getting bigger and bigger and bigger. I definitely concur with James Rickards. A major financial crisis is certainly coming, and because of all the irrational optimism that we are witnessing at the moment, most Americans will be completely and utterly blindsided by what is ahead. And again, I agree. Is it 2018? Is it 2019? We've got the 1988 Economist magazine cover from 30 years ago. Get ready in 2018 for a new world currency. We'll call it the Phoenix coin. And it's got the dollars, this phoenix bird on the front cover of the page, rising out of the ashes of burning paper dollars from all over the world, not just US dollars. And a giant gold coin around its neck. 2018. Get ready. And it said, get ready for a new world currency. And remember, I read you the article inside the magazine that I found online. We'll pen in the Phoenix coin for sometime around the year 2018. Again, that was a 30-year-old prediction. And all of the things are in place right now to where that does make sense. Burning dollars, massive debt, can't pay it back, right? Get rid of these old ancient piles of cash and let's go to the New World Order Phoenix coin or whatever. Will it actually be in 2018? That's the question. Will it really truly be in 2018? That's debatable. We have no idea. So I'm with Rickards. It could happen today or tomorrow. Technically, everything's there that needs to be there to let this thing go. All they got to do is stop propping up the markets. Tell the Reserve to back off. The plunge protection team, also known as the working group on financial matters. Guys, stop doing it. Let the markets handle themselves. Okay, instantly you would see the market crash. It would be instantaneous that the markets would crash as soon as they step outside of their manipulation and they're filling in what I like to call filling in the markets. When you're a central bank and you have unlimited money, I mean, you can move any market, you can stop any market from being moved. You can just buy when you need to buy and sell when you need to sell, and nobody would know. No one knows where it's coming from. But anyways, take care.